Hey guys, hope you are doing well. As you can see, you already know English is not my first language, so apologize if you don't understand any word. Just let me know in the end, and I'm more than happy to go over it again and explain and try to explain better. I'm trying to make this small video because I noticed on Discord a few questions, and it's something that I took a lot of losses in the past, and when I was going over my trades, I realized that's a very simple mistake that I was doing, and I would share with you because hopefully you can avoid some losses that are not very good in my opinion. So very quick here on this diagram. I want to, in the Photon strategy, we want to get involved in areas like this one, areas like this one, and areas like this one, and areas like this one to play the pullback. Of course, we can scale in during the move to the downside, or even in the corrective phase, we can also scale in. However, something that I noticed a few of you guys are taking is these trades in here. Price is moving down, and you guys like buy from this weak leg and get involved in the weak leg, and that comes to not understanding structure, in my opinion, and you're just taking very low probability trades. For example, let me just show you. For example, okay, so imagine price is moving down, right? Then we have a shock to the upside. Imagine this is M15. We look left. We have a demand. Okay, you can get involved here, play the pullback. You play the pullback to the upside, and then price reach the supply, shock bearish. After this, you don't want to buy from here, right? Because this leg is weak. It never breaks swing structure. It didn't achieve anything. It was just used to facilitate a pullback, to mitigate the supply, and once the supply is mitigated and order flow is bearish, the supply take over demand. These demands here from the weak leg will likely just produce a small pullback, and you don't want to take this small pullback. You want to stop taking them and focus on the pro trend moves. Wait for the pullback to happen, tap the supply, and you go to the downside. Again, you don't want to buy from here. You wait, and then you sell again. I just want to touch in this point because now I'll share some examples from last week, and yeah, just a very low probability trade. Stay away from these. Yes, you can have 5R here because if you're using the trades plan, the beginner, 5R, yes, you can take 5R here, but it's not very good trades, and the strike rate probably also not good. So basically this where you want to trade is from here, and on the weak legs, wait for them to be broken, and look left, and if you want, you can take the pullback after the weak leg is broken, right? So let me just show you some examples on the chart. For example, I noticed a few of you guys were looking for buys here, right? I don't know what you guys saw, to be honest. I don't know if it's this demand or something like here, I don't know. I think it was thinking this is inducement, and I think one of you have something like this. I can't remember very well, but I think you guys were looking to the upside. I think you guys were looking to take this trade. You took this trade to the upside. And yes, you can take a trade like you have a chalk. This is a demand that we have inducement. We have the chalk here, inducement above. Price gives a 5R to the upside. Like you can take a 5R here, but just analyze like why are you taking trades based on a weak leg? Because this is nothing more than this, right? We have a move up here, move down. So we are bearish. We broke. In this case, we broke here, and price moved to the upside, and now it's going to the downside. Like, stop taking these trades. I know some of you took this one, but understand that you are trading from a weak leg. This is weak, right? You don't want to take a weak leg. There are a few exceptions, a few ways you can trade weak legs. It's a little bit more advanced, but it's basically when you have item frame intentions behind. For example, you have M15 and then M15 boss to the upside, right? And here is, imagine a 4-hour supply, and then you have a M15 choke, right? And you have a swing low, the swing high. M15 is bullish, right? But you have a change of character, and you reach a 4-hour supply, and you know that overall the trend is bearish, and basically daily 4 hours, like item frame is bearish, and this bullish M15 order flow was just used to facilitate price to pull back the 4-hour supply. And once a choke happen, you can take the pullback, and even though the strong leg here is the low is strong and the high is weak, even though price rejects the low, you can still get involved here, anticipating that the low will not hold because we reach a 4-hour supply. Basically, high time frame overrides low time frame, but this is a little bit more complicated. If you are new, just forget this. But going again in this example, so as you can see, this one just produced a small pullback, right? Price went to the downside, a small pullback, and then moved to the downside again. So stop taking these trades and focus more on the trades pro trend from strong legs, right? There are more examples that I want to share with you. It was in the beginning of the week. This one, I think, price reached this. This is a daily flip, right? It's a big zone. But usually when price hits the distal, we tend to have a small reaction. And I remember it was on Monday. So price tap here to the upside, right? And London session price is around here, and some of you were looking for buys, but again, this is weak, right? This is weak. This never caused a break of structure. What caused a break of structure was this one. In this situation is up here, because like it's not to be a structure lesson video, but I remember it was something like that. This is the high because never closed here. So, but basically this is a weak leg, right? And if you just stop taking these trades like from these weak legs and focus on the strong ones, the pro trend from strong legs, and target and trade through weak legs is different, right? So we have the extreme demand that gave unfavorable price action. Price popped to the upside, we have a flip here, right, and moves to the downside. So everyone that takes long here basically is a loss. And understand why, it's a weak leg, right? If this one is also something that I think it's low probability, and a few of you took it, it was a 5R or a break even, don't know, that you took the buy here. But this leg to the upside, again, never broke swing structure, mitigate supply, 4-hour daily are bearish, we have a shock to the downside, supply took over demand. You can see here also the interaction, right? The fractional refinements, price push up, push down, push up, push down. So supply took over demand, and you took a buy from here, but it's very, very risky because this is weak. You can take these buys and it's just it's more risky, right? It's a pullback. In this situation, it was a break even or a win, I don't know. But the move that will give you percentage and good results and money in the end of the day is this pro trend, like against the weak legs, right? There are, I will show you just one more example to finish, because I think you guys already understand, is on the, remember just when we were here, right? Even here in night time frame picture, right? We have a push down, right? The push down, the push up, and then the push down. Like all the trades from this week leg here, losses. I probably didn't take even a win here. It just break even losses because this is weak, and like it will get run. Like don't trade these ones. Trade the pro trend moves. But talking about this, when we have a shock to the upside on the 4 hour after the run of the week leg, and what I said previously, that you want to take, if you want to take the goal from the weak legs is not to trade from them, is wait for them to be run, and then you can trade the pullback, right? Exactly what happened here. This one weak leg, right, get run, you trade the pullback for our chalk here, and the indication that the 4 hour will pull back. And if you go to M15, like it's all the same. Here we have a boss to the upside, right? Weak leg, weak high, strong low, weak high, gave extreme, gave a unfavorable price action, eventually get run. All the cells was stop out, break even, losses. Where the win came from? Strong leg again. This weak high, losses. Again, weak high with a strong low down here. You can, I think it was, this one is also something that a few people were looking. Basically trying, because this never reach, this low never mitigates nothing, so probably will be used as inducement and will fail. But it can be dangerous trading from weak legs, and as you can see, yes, it gave a small pullback. After a shock here, you can see with the inside bar, this is a shock to the upside. Order flow becomes bullish here, and internal order flow becomes bullish here, and the high gets run. So trading from weak legs, like, basically is very, very risky. As you can see, you can test by yourself, go over the charts, previous price action. It can give you small trades here and there, but eventually the good trades is trading through weak legs and not from them. Again here, extreme gave a reaction. Yes, you can trade this, but where is the big win? Is trading through the weak leg, not from the weak leg, right? I think you guys already understand, but yeah, I was backtesting the previous week, and I find this could be helpful for some of you, especially someone that is starting out. So yeah, if you don't understand anything, send me a message, let me know, because I understand, like, my English is not the best, and sometimes can be difficult for you to understand, or even for me to deliver the message that I wish to deliver. But yeah, see you guys in the next one. Bye.